Hello, ladies and gentlemen, and welcome to the Strategy of the Week for Friday, April the 11th of 2014 for Canada. My name is Dan Misch. I am the Director of Retirement Services, and I'll be presenting this week's strategy. It's titled, The Best Gets Better. And this is an overview of what we're going to do with tonight's strategy. We're going to review a trading system that was originally shown back in November of 2013. We're going to update the time frame for what was tested. We're also going to make a change and update our asset deployment part of our trading plan. And then finally, we will stagger the start dates. And the idea here, of course, is we're just trying to take something that we know has worked previously and make it better and refine our trading plan. So I mentioned this was originally shown. This is from VectorVest University. On November the 29th, we did a strategy that was called Best of Both Worlds. And it was looking for both capital appreciation and dividend collection for your portfolio. Dr. DeLito even says this in his book, Stock Strategies and Common Sense, that the best of all worlds, collecting dividend checks while prices of your stocks go up, comes from finding solid growth stocks that pay dividends. And VectorVest is ideally suited to find these babies. So let's move over into VectorVest and see how we can do just that. To begin, we are looking at a one-year market timing graph of the VectorVest composite for Canada. We have a 65-day moving average, that's the line intersecting it, and the red and green arrows are toggled on to show the confirmed calls. So it's been an up year for Canada, we know that. We had a short-lived confirmed up back in July of last year, followed by a just over a month-long confirmed down, and finally this confirmed up that we're in now since September, and the VVC continues to stay up above that 65-day MA. And so what we need to do is identify stocks that are participating in this upward run. And of course, on top of that, we do want to identify only the stocks that are going to give us a chance for some good dividend payments. So we'll move from the graphs section into the viewers, where we're looking at a special watch list that is titled Best New Highs. Essentially, it's looking for stocks that have hit a new 52-week high. And this is as of the close on Thursday the 10th, and you'll recognize a lot of the names in here. They all have strong fundamentals in their RV and RS, good timing from the relative timing leading to a high VST score, and buy recommended stocks. So we're going to select stocks from this watch list, but we need to be a little bit more specific about what we're looking for. For example, if I change the date on this watch list back to the date of September the 11th when the confirmed up began, and we quick test the top 10 stocks from then until now, overall you see that this watch list did identify stocks participating, as 7 out of the 10 went up in price, giving us an average return of 41%. While the 41% is nothing to be upset about, if you look over in the dividend column of these stocks, 4 out of the top 10 don't even pay a dividend. And we're looking to get those payments, so what we're going to do is build a search that looks specifically at this watch list. So here in the Unisearch section, I've saved this in a folder called My Long Searches, which everybody has one of those in their grouping. I've called it Best New Highs and Dividends. Of course, the Best New Highs comes from the watch list we just looked at, and I added in some dividend components. So our first line of criteria is that our watch list must be equal to best new highs. Second, I wanted to ensure a decent payment, so I'm looking for a dividend yield greater than or equal to 3%. That's on an annual basis. And then to add the VectorVest YSG vector in there, that must be greater than or equal to 1. All the stocks meeting those 3 parameters are then going to be sorted by their VST plus YSG, and that sort is designed to give you all the capital appreciation and income that you can get from stocks. So I'll run the search. Again, this is as of the close on Thursday. You'll see a lot of those familiar names in there, and what I want to do is open up a graph of some of these stocks. And this first one here, TD, obviously having a very good run up, and plotted down below, I've got their earnings per share in blue and the VST score in green. And you can see as their earnings continue to go up, their VST stays very strong, and these are indicators we can use as part of our trading plan. We can look down through a few more. Royal Bank, this one's had more price volatility, but the VST is staying strong, meaning fundamentally they're okay. And Vermilion, having one of the prettiest graphs you'll see, everything moving up from left to right in a continuous fashion. So for our back test, we're going to use that VST as an indicator to keep us in the stocks. We'll use the VST as a stop. So the first thing I want to do is go to the back tester, and this is the original test that we had done in November that was called the best of both worlds. So it used the confirmed calls timing system, and it began in January of 2013. That was just an arbitrary time to start. We actually did not get a confirmed up until January the 10th of 2013, but we just began on the first trading day of that year. And this was run through November the 28th. A $100,000 portfolio had grown nicely, 30.5% in that time frame, with very low commissions of only $109 and a very manageable drawdown of less than 6%. You can see the graph down below. It's plotted with those confirmed calls on there. But what we're going to do to make this better is if you look at the 5 holdings we had in that portfolio, we owned Transcontinental 2 times, TCL.A and TCL.B. Well, that's going to give us a little bit too much concentration in any one position. So the first thing we wanted to do is just limit ourselves to having only one stock per industry. And the way you can do that is by clicking on Edit. And when you're in the Automation Rules Up section, under the More Settings tab, down at the bottom, you can choose the maximum number of stocks per industry, per sector, and some volume requirements. And I just changed this to 1, so it'll keep us from buying that same stock twice. And here are the results from that. I've now changed the naming convention to Best Gets Better because our overall gain did go up to 33%. Commissions didn't change at all. Drawdown didn't change at all. The only thing that changed is the 5 holdings. We now only own the first position of Transcontinental and not the other one. And you can see 3 of the positions that were purchased were bought right at the beginning of the test in January and were still in the portfolio because those VSTs have remained strong, and that allows us to collect some of those strong dividends. Remember, we have a 3% dividend yield requirement for the stocks that the search is going to find. So the next step was to bring this all the way to the current time frame, since we've had a lot of upward market movement since November. And here are the results of that, and this certainly did continue to participate in the uptrend. Our $100,000 portfolio is now worth just shy of $158,000. 62.5% of the trades we've placed have been winners for us so far. The gains, of course, are up to just about 58%, and our commissions have not changed since the original test in November. We haven't done any additional trading to pick up that extra 30%. Now, our drawdown did increase from the 5.95 to 11.21, and that's that pullback we had right at the beginning of the year. And looking at these 5 holdings, we still have those original 3 that were bought at the confirmed up in January of 2013, 1 from September, and 1 from October. And you can see have some strong gains in there, particularly in Auto Canada. Now, if I highlight all of these stocks and we take a look at a graph, we have that same setup with that earnings per share and VST shown. And I can go ahead and toggle on the dividends and drag us back to right when we first got into these stocks. And you can see that Auto Canada has had 5 times that it's paid us. And you can look at all the other stocks you have there from the times they were purchased till now. Now, I know that ideally everybody would want to get in at the beginning of the upturn that you can identify in hindsight as being somewhere along the road here in 2013 and continuing. So what I did is I ran these tests beginning with the confirmed up in September on the 11th, and then just moved forward month by month. So I would begin in October, begin in November, December, January, February, and even begin one in March, exactly 1 month ago from today. And you can see the results right here. If you got in September, you're only up 2.5%. And October was a little bit better. November was clearly an ideal time to start this strategy, but any of the months that have happened since we originally showed the test have given you positive results, very low commissions, and again, drawdowns that would seem manageable. So if I go back into the Unisearch and look at this list of stocks, and you're looking to deploy some assets right now as the confirmed up still stands, you now have a manageable list. I want to thank you for joining us for this week's presentation, and please stay with us for Timing the Market.